Greetings from Kotak Mutual Fund. Every year we try to predict market and by and large go wrong. Let's talk this year about some serious questions. Does God exist? And is God an Indian? I believe there is a God, and probably he or she is an Indian. Otherwise, how do you explain what happened in 2023? We were worried about oil prices going higher thanks to Israel-Hamas war. God said Tathastu, and oil prices are lower. We were worried about growth for geopolitical risk, energy prices. The second quarter GDP growth came way above expectation. In the month of August, we were worried about rain. God said Tathastu, and boom, rains recovered. Monsoon is in deficit, but just a little. We were worried about continuity of governance. God said Tathastu, an election result came and gave confidence to the market. We were worried about Fed sticking to higher for longer. God said Tathastu, and boom, Fed is now singing a different tune. From energy prices to growth to monsoon to Fed pivot to election result, it seems everything went in India's favor. Don't you believe there is God and he or she is an Indian? Let me give you one more reason to convince you. God also knows that we are Indian. We are capable of snatching defeat from the jaws of victory. Which is why a Birbal ki kahani is happening with us. If you remember the old Akbar-Birbal story, Akbar wanted Birbal to make a line bigger without touching it. Clever Birbal drew a small line to make line above bigger. God is doing same thing with India. Not only he or she is making our line big, but also rubbing others' line to make our line look bigger. Look at our peers. Russia invaded Ukraine. Now FPIs can't go there. Brazil has great fundamentals and cheap, but there is communist government. South Africa, people are worried about their own safety. Where is the question of money? China has design on Taiwan, which will restrict global capital. Turkey currency keeps on depreciating. Across all emerging market peer group, India looks bigger and brighter. That makes me believe that yes, there is God and he or she is an Indian. I'll give you one more reason to agree with me. You have heard the story of a cat and two monkeys. Monkeys found the piece of bread, went for mediation with cat, and finally the cat ate all the bread. Earlier we were always the monkey who will find a bread but let the cat eat away. Now we have become the cat. There are two blocks in the global system. Russia, China on one side, US, Europe on the other side. Today, we are getting cheap oil from Russia and jet engine technology from America. Now put all these things together. Don't you want to believe there is God and he or she is an Indian? And like 2023, he or she might say Tathastu. Well, who knows? But let me now talk about what we see going into 2024. Globally, central banks have done a very, very fine balancing between inflation and growth. They have raised interest rates at a fast level to higher level, but they didn't take out liquidity, and the government continued to provide fiscal support. Combination of that accelerator and brake ensured that inflation remains little above target range, but much lower than the previous highs. And growth, instead of going into recession, is subdued anyway, moving away from lighter vein to serious stuff. We believe 2024 will be influenced by many factors. Let's analyze them. Globally, central banks have done a great job in managing inflation and growth. They raised interest rates. They didn't take out liquidity in sufficient quantity and at speed. The central government continued to provide fiscal support. This combination of accelerator and brake between central bank and federal government ensured that inflation fell down, though it remains above comfort level, and growth slowed down but didn't go into recession. 2024, we believe, will be role reversal. Central bankers will become accelerator by cutting rates, and government may have to pursue the path of fiscal prudence. Of course, there are elections in US and UK, and who knows in election year whether path of fiscal prudence will be followed or not. How US Fed pivots will have influence on emerging markets, including India. As of today, market is pricing in rate cut by US Fed somewhere around March 2024. The other factor to watch out will be geopolitical event. Russia-Ukraine has now moved into back pages. Hopefully status quo will be there in 2024. Israel-Hamas war is escalating into probably sea trade, and it can expand. Geopolitical risk also could have impact on our market. The most important thing for our market is how will global investor allocate capital? Will they invest in markets like India, which is performing all-time high, but expensive at premium to all emerging markets? Or will they go to a country like China, which is 1/3 of the valuation of India? But for last 3 decades, the index has gone nowhere in dollar terms. People will invest looking at past performance and future potential, or will they invest looking at valuation? This will determine how much flow will come to Indian market. Fed pivot, geopolitics, and global investors' allocation between valuation versus growth will determine flows into our market. If we come to local economy, we are oasis in the desert. We are doing reasonably well. Government has led the investment. Consumption, especially in urban India, has bounced back. Rural India is recovering. Trade is now reasonably under control. And overall, India is firmly placed to move from 5th largest economy to 3rd largest economy over next couple of years. Will the growth sustain? I believe growth will sustain because there is Triveni Sangam of talent, infrastructure, and capital. Shantanu Narayan, CEO of Adobe, mentioned that if he was born in today's India, he wouldn't leave Hyderabad for America. When talent like Shantanu Narayan went abroad, they created Adobe in Western world. When talent like Shantanu Narayan will stay in India, hopefully they will create Adobe in India. Talent also requires capital to grow. Earlier, your parents were your source of initial capital. Today, a private equity venture capital fund will come and fund you. And finally, there is infrastructure creation. What we built before 2013 in terms of road, port, airport, power capacity, rail electrification is almost getting replicated in 10 years between 2014 and 2024. This massive infrastructure creation combined with talent and capital gives confidence that India's growth story will continue. And our markets are pricing that. We are at premium to most developed and emerging markets. This is essentially because of 3G. 1G of growth. Our earnings growth is superior to most emerging markets. 2G of governance. Our corporate governance standards are far better than most emerging markets. And third, and the 3G, lesser talked about 3G, is green transformation of India. Despite being the fifth largest economy, we remain the lowest per capita carbon emitter in the world. We are growing, but without disrupting global ecology. As long as India delivers on this 3G of growth, governance, and green, we believe investors will be buyer of India growth story. Earnings growth of India, election results in 24, that could have impact on market in 2024 if they are contrary to investors' expectation. What should you as an investor do? Well, while broad market looks reasonably priced around its historical averages, there is a pocket which is a quicksand in the market. There are stocks where floating stock is very, very limited. The current holders are very reluctant sellers. Small amount of buying is pulling prices higher. These stocks, we believe, are trading at valuation which is very, very high. And at this valuation, if you invest, your expected future return should be very, very low. And your investment horizon should be very, very long. Our recommendation, avoid low floating stock counters with very, very high valuations. The second thing to focus upon will be your return expectation. 8 years running, Indian markets have delivered positive return. While yes, Indian cricket team won 10 matches in a row in World Cup, but final we lost out. After 8 years of positive return, while there is optimism for 24, it will be better to have moderate return expectations. The gap between large, mid and small will narrow down from a return point of view. Sectorally, we believe banking and financial services should do well as they have become cheaper and they continue to have good fundamentals. Auto should do well as volume expands further on supply chain ease. Manufacturing in India is a long-term theme. China plus one is resulting into companies and countries diversifying their supply base. Indian manufacturing companies which cater to domestic and global market will be beneficiary of this. 2024 is year full of optimism. Obviously, there will be events which will create volatility in the market. Try to take advantage of those volatilities. Stay invested for longer term. Wish you and your family a very, very happy new year. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.